Imagine waking up one day, opening your bank app, and realizing that the small credit card mistake you made 5 months ago is now snowballing into a financial disaster. The kind of mistake that could hold you back for years. Scary, right? Well, if you're in your 20s, the decisions you make now will either set you on the path to wealth or hold you hostage in a cycle of debt and regret. But here's the good news. You have the power to avoid these costly mistakes, and today I'm going to show you exactly how. In the next 10 minutes, I'm going to reveal the most common credit card mistakes people make in their 20s, and how these seemingly harmless errors could be quietly sabotaging your future wealth. So stay with me, because missing just one of these could cost you big time. Let's dive in. Mistake number 1. Paying only the minimum balance. The first big mistake, paying just the minimum balance. Now, it may seem like a small payment today, but what you're really doing is giving the bank a green light to charge you interest on interest. That $20 minimum payment could easily spiral into hundreds of dollars over time. Here's the crazy part. Most people don't realize they're walking into a debt trap until it's too late. And trust me, you don't want to be the person who's still paying off your 20s when you're 35. If you've ever thought, I'll just pay the minimum this month, think again. I mean, would you really want to stretch out your debt longer than the last season of your favorite show on Netflix? Didn't think so. But what's the alternative? The key is to pay off more than the minimum. Even just a little extra each month can save you thousands in interest. If you feel tempted to pay less, remember this. That small sacrifice today means freedom tomorrow. But maybe you're thinking, hey, as long as I'm paying it off, I'm doing okay, right? Well, not so fast, because the next mistake is even more dangerous than you think. Mistake number 2, ignoring your credit utilization rate. Credit utilization rate. It sounds technical, but it's one of the most critical factors in determining your credit score. Essentially, it's the ratio of your credit card balance to your total credit limit. And here's the shocking part. Keeping your balance too high, even if you pay it off every month, can hurt your credit score. Wait, did you catch that? You could be paying your bills on time and still damaging your credit. Ideally, you want to keep that utilization rate below 30%, but to really boost your score, aim for under 10%. And here's where it gets tricky. Many people don't realize that even a large one-time purchase can temporarily spike their utilization rate and drop their score. So before you max out your card on that new laptop or trip to Vegas, remember, you're playing with fire. Now, you might be thinking, okay, I'll just avoid using my credit card entirely then. But that leads us straight into mistake number 3. Mistake number 3, not using your credit card at all. Yep, you heard me right. Not using your credit card can also hurt your finances. Sounds backwards, doesn't it? But here's the deal. Your credit score is built on trust. Lenders want to see that you can manage credit responsibly, and if you're not using it at all, you're not giving them any reason to trust you. Think of it like this. If you had a friend who never borrowed your stuff, would you know whether they're good at returning it? Exactly. The solution here is simple. Use your card for small, regular purchases, like gas or groceries, and pay it off in full every month. This helps you build a solid credit history without racking up debt. Don't let the fear of credit card debt scare you into missing out on the opportunity to build wealth through credit. But speaking of fear, there's one mistake that's more terrifying than all the others combined, and it's a trap many fall into. Mistake number 4, signing up for too many credit cards. Too fast. Ever get tempted by those credit card offers that promise you a sign-up bonus, cashback rewards, or even a free trip? Yeah, they're enticing. But opening too many credit cards at once is like adding fuel to the fire. Every time you apply for a new card, the bank performs a hard inquiry, and too many of these can drag your credit score down. Plus, more cards mean more temptation to overspend. And trust me, The last thing you want is a wallet full of cards but no control over your financial future. Here's what to do instead. Be selective. Start with 1 or 2 solid cards that offer rewards you'll actually use. It's not about having the most cards, it's about using the ones you have wisely. But there's one final mistake, and this one is the silent killer of your financial growth. Mistake number 5, failing to track your spending. This last mistake is something most people overlook until it's too late. If you're not tracking where your money goes,
you're playing a dangerous game. Credit cards make it easy to spend without feeling the immediate pain. A $50 dinner here, a $30 Uber ride there, it adds up fast.
And before you know it, you've spent hundreds without even realizing it. Here's the truth: financial freedom begins with awareness. Use a budgeting app, set spending limits, and review your statement regularly. Don't let your 20s be the decade where your money vanishes without a trace. If you don't control your spending will control you. Your 20s are the perfect time to lay the foundation for a wealthy future. By avoiding these common credit card mistakes, you're taking control of your finances and setting yourself up for a life of freedom and abundance. But remember, knowledge is only powerful when you apply it. So don't stop here. Want to know the best credit cards to build your credit and maximize rewards in 2024? I've got you covered. Click the video on the screen now to discover the best credit cards for beginners. It's time to start making your credit work for you, not against you. Wait for next video: the best credit cards for beginners in 2024.